Welcome to the Shakaama Live Show. My name is Shakaama. Binary options are based on a simple yes or no proposition. Will an underlying asset be above a certain price at a certain time? Traders place trades based on whether they believe the answer is yes or no, making it one of the simplest financial assets to trade. This simplicity has resulted in broad appeal amongst traders and newcomers to the financial markets. As simple as it may seem, traders should fully understand how binary options work, what markets and time frames they can trade with binary options, advantages and disadvantages of these products, and which companies are legally authorized to provide binary options to U.S. residents. Binary options traded outside the U.S. are typically structurally different than binary available in the U.S. exchanges. When considering speculating and hedging, binary options are an alternative, but only if the trader fully understands the two potential outcomes of these exotic options. Binary options provide a way to trade markets with capped risk and capped profit potential based on a yes or no proposition. For example, would the price of gold be above $12.50 at $1.30 today? If you believe it will be, you buy the binary option. If you think gold will be below $12.50 at $1.30, then you sell this binary option. The price of a binary option is always between $0 and $100. And just like other financial markets, there is a bid and ask price. The above binary may be trading at $42.50 bid and $44.50 offer at 1 p.m. If you buy the binary option right then, you will pay $44.50. If you decide to sell right then, you sell at $42.50. Let's assume you decide to buy at $44.50. If at $1.30, the price of gold is above $12.50, your option expires and it will become worth $100. You make a profit of $100 minus $44.50, which equals $55.50, less fees. This is called being in the money. But if the price of gold is below $12.50 at $1.30, the option expires at $0. Therefore, you lose the $44.50 invested. This is called out of the money. The bid and offer fluctuate until the option expires. You can close your position at any time before expiry to lock in a profit or reduce a loss, compared to letting it expire out of money. Eventually, every option settles at 100 or 0. 100 if the binary option proposition is true, and 0 if it turns out to be false. Thus, every binary option has a total value potential of $100, and it is a zero-sum game. What you make, someone else loses, and what you lose, someone else makes. Each trader must put up the capital for the side of the trade. In the example above, you purchased an option for $44.50, and someone sold you that option. Your maximum risk is $44.50 if the option settles at 0. Therefore, the trade cost you $44.50. The person who sold to you has a maximum risk of $55.50 if the option settles at $100. $100 minus $44.50 equals $55.50. A trader may purchase multiple contracts if desired. Another example. NASDAQ US Tech 100 Index is greater than $3,784 at 11 a.m. The current bid and offer is $74 and $80, respectively. If you think the index will be above $37.84 at 11, you buy the binary option at 80, or place a bid at a lower price and hope someone sells it to you. If you think the index will be below $37.85 at that time, you sell at $74 or place an offer above that price and hope someone buys it. You decide to sell at $74, believing the index is going to fall below 37.84, called the strike price, at 11 a.m. And if you really like the trade, you can sell or buy multiple contracts. The maximum profit on this ticket is $370. If you buy 5 contracts at $74, your max profit is $370. Your max loss is $130, of course. The bid and ask are determined by traders themselves as they assess the probability of the proposition being true or not. In simple terms, if the bid and ask on a binary option are at 85 and 89 respectively, then traders are assumed a very high probability that the outcome of the binary option will be yes, and the option will expire worth $100. If the bid and ask are near 50, traders are unsure of the binary will expire at 0 or 100. It's even odds. If the bid and ask are at 10 and 15 respectively, that indicates trades think there's a high likelihood the option will outcome to be no and expire worth 0. The buyers in this area are willing to take the small risk for a big gain, while those selling are willing to take a small but very likely profit for a large risk. Binary options trade on the Nadex exchange, the first legal UX exchange focused on binary option. Nadex provides its own browser-based binary option trading platform, which traders can access via demo account or live account. The trading platform provides real-time charts along with direct market access to current binary option prices. Binary options are also available through the Chicago Board Options Exchange, CBOE. Anyone with an option-approved brokerage account can trade CBOE binary options through their traditional trading accounts. Not all brokers provide binary option trading, however. Each Nadex contract traded costs 90 cents to enter, 90 cents to exit. The fee is capped at $9, so purchasing 15 lots still only costs $9 to enter and $9 to exit. If you hold your trade until settlement and finish in the money, the fee to exit is assessed to you at expiry. If you hold the trade until settlement but finish out of the money, no trade fee to exit is assessed. CBOE binary options are traded through various option brokers, each charge their own commission fee. Multiple access classes are traded via binary options. Nadex offers trading in major indices such as the Dow 30, Wall Street 30, S&P 500, US 500, the NASDAQ 100, US Tech 100, and Russell 2000, US Small Cap 2000. Global indices for the United Kingdom, the FTSE 100, Germany 30, and Japan 225 are also available. Trades can be placed on Forex pairs, the Euro USD, GBP USD, USD Japan, Europe Japan, AUD USD, USD Canada, the GBP Japan, USD, CHF, Euro GBP, as well as AUD Japan. Nadex offers commodity binary options related to the price of crude oil, natural gas, gold, silver, copper, corn, and soybeans. Trading news events is also possible with event binary options. Buy or sell options based on whether the Federal Reserve will increase or decrease rates, or whether jobless claims and non-farm payrolls will come in above or below consensus estimates. The CBOE offers 2 binary options for trade: an S&P 500 index option, the BSZ, based on the S&P 500 index, and a volatility index options, BVZ, based on the CBOE volatility index, VIX. A trader may choose from Nadex binary options in the above asset classes that expire hourly, daily, or weekly. Hourly options provide opportunity for day traders, even in quiet market conditions, to attain an established return if they are correct in choosing the direction of the market over the time frame. Daily options expire at the end of the trading day and are useful for day traders or those looking to hedge other stocks, forex, or commodities holding against that day's movements. Weekly options expire at the end of trading week. and are therefore traded by swing traders throughout the week and also by day traders at the options expiry approaches on Friday afternoon. Event-based contracts expire after the official news release associated with the event, and therefore all types of traders take positions well in advance of and right up to the expiry. Unlike the actual stock or forex markets, where price gaps or slippage can occur, the risk on binary options is capped. It's not possible to lose more than the cost of the trade. Better than average returns are also possible in very quiet markets. If a stock index or forex pair is barely moving, it's hard to profit. But with a binary option, the payout is known. If you buy a binary option at $20, it will either settle at $100 or zero, making you $80 on your 20 investment or losing your 20. This is a 4-to-1 ratio, reward to risk ratio, an opportunity which is unlikely to be found in the actual market underlying the binary option. The flip side of this is that your gain is always capped. No matter how much the stock or forex pairs move in your favor, the most a binary option can be worth is $100. Purchasing multiple option contracts is one way to potentially profit more from an expected price move. Since binary options are worth a maximum of $100, that makes them accessible to traders even with limited trading capital, as traditional stock day trading limits do not apply. Trading can begin with a $100 deposit at Nadex. Binary options are derivative based on an underlying asset, which you do not own. Therefore, you're not entitled to voting rights or dividends that you'd be entitled to if you own the actual stock. In conclusion, binary options are based on a yes or no proposition. Your profit and loss potentials are determined by your buy or sell price, and whether the option expires worth $100 or zero. Risk and reward are both capped, and you can exit an option at any time before expiry to lock in a profit or reduce a loss. Binary options within the U.S. are traded via the Nadex and CBOE exchanges. Foreign companies soliciting U.S. residents to trade their form of binary options are usually operating illegally. Binary options trading has a low barrier to entry, but just because something is simple doesn't mean it's easy to make money with. There is always someone else on the other side of the trade who thinks they're correct and you're wrong. Only trade with capital you can afford to lose, and try a demo account to become completely comfortable with how binary options work before trading with real capital. Thank you for watching the Shakaama Live Show.